You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means it is Education Wednesday. That means it's on. It is time for Options Bootcamp listeners. Yeah, it's going to be a good one today. You can tell I'm pumped, excited, maybe a little bit perplexed, all of the above, all of the emotions swirling around right now. My name, of course, Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. If you're new here, maybe you joined us in the latter portion of last year. Maybe you're just coming in now for the first time due to all this madness with game. Hey, welcome. B, you're missing out on a whole bunch of other stuff, including other shows today. Education Wednesday also has Options Playbook Radio. You guys will probably love that. A lot of you are already checking that out, but if you're missing that one, check it out. The best way to get it all, of course, just subscribe to the full network wherever you're getting this show. I know a lot of you like to go straight for boot camp. Hey, we love you guys too, but you're missing the whole rest of the network. So wherever you're getting this, make sure you upgrade to the full network, Apple Podcasts, Google Podcasts. Our app is also available in most of the major app stores. And, of course, wherever you're listening to this, make sure you keep rating and reviewing this content out there. It really does help new folks continue to discover the program. And let's see who we're going to hear from today on the show. Who could it be? Oh, yeah, it's the black-hatted one himself. Mr. Dan Passarelli, the founder of Market Taker Mentoring and the author of 1 or 2 or 47 options-oriented tome. Mr. P, welcome back to the Options Bootcamp Drill Instructor Proving Ground, sir.
I'm glad to be back here with all our friends online. I'm very excited.
You know, there's not much to talk about, so I think maybe we'll cut it short early. We'll just do the intros and leave. What do you think, sir?
Yeah, nothing's going on today. Boring.
Nothing going on at all. All right. Let's get to it. You guys all want to know about it. Here we go. Basic training time. Here we go.
All right, Boot, it's time to get in line. What you're going to do is learn. You're going to learn how options work. Do you hear me? Yes, you're going to learn options trading inside and out, basic to complex. There will be no failures. Do you hear me? Yes, Pull in, prepare to learn. Yes,
all right, everybody. just laughing because it seems like we were just saying this at the end of last year. 2020 was such an insane year. Let's hope for a quieter entry to the new year. And what we've seen, all the madness, all the unprecedented things that happened over the course of 2020, there can't be any other crazy surprises lurking in store for us here in the new year. That was 2021. And so far, January is not even over yet, listeners. And we've already seen a lot of interesting and unprecedented things. Of course, what happened in DC earlier this year. And now the entire trading community obsessed with a flagging video game retailer known none other as GameStop. Yeah, a lot of you have questions. I get it. You guys have been bombarding us. So we're going to dive into it today. I'm going to pretty much tell you everything you ever wanted to know about short squeezes and GameStop and all this madness, but we're afraid to ask. A bunch of you bombarded us with questions. I'll just pull a couple here from some of our regular cohorts. Rhythmic Angel chimed in, says, hello, Mark. Could you please help rip apart game and help explain what happened? With open interest being more than the stocks available, how is this possible? Gamma squeeze, short squeeze, put call ratio being on the extremes. A lot happened on this stock, which some traders compared to stocks they've seen on the pits days, they say, but they don't explain how they all ended. It'll be nice if you have a crystal ball on this one. Ooh. How might it all end, you think? Thanks, as always. We also had a regular listener. I think this is our food guy, Dan, who always sends in food photos. This time, no food photo, straight to the point. Theodore Domzowski saying, any chance you guys can break down all the folklore I am reading about the, quote, short squeeze? It's unfortunately not covered in any of my books. I know that everything that one reads online is, quote, true, but I would love to know the actual mechanics of what goes on. Thanks. Great show. I'm going to break it all down in a second, Dan, in terms of what's been happening. But first off, let's just start there. Everyone's befuddled. What is your take on what is going on? What are your thoughts? What's your instant kind of reaction? And what are the folks over there at MTM, your community, what are they bombarding you about with this right now, sir?
Well, yeah, everybody's talking about it. I mean, right now there's a table of little old ladies in Des Moines, Iowa at a diner talking about freaking GameStop right now. Everybody's talking about it. It's the thing. And so, yeah, I mean, I think there's a couple things going on. I mean, I don't know if, I don't have the agenda in front of me. Mark is actually, for those of you who are listening who don't know this, Mark is actually very organized. He's the organized one of the two of us. Let me pop that open here.
Tell you what, I'll set the stage while you collect your thoughts here, sir, because there's a lot to set. It's a crazy stage, and the players are still moving. The pieces are not set by any means. So what the heck is going on? How do we get here? GameStop, of course, now infamous retailer of video games. You go there, they kind of created their own secondary market for video games. So kids and their parents, everyone else can go in there. You buy a game, a $60 game for whatever. You go back in, you sell it back. GameStop pays you $4 for it. And then they turn around and resell it as a used game for $49.99, $52. So they were making a ton of money doing that. They had their own markets. Like the old days when we were on the floor, we always used to say, man, if we could be the only guy in the pit, man, the markets we could make would be so wide and they would be just so crazy and we could just get paid bazillions of dollars. Well, GameStop had that for a while. They were kind of the only game in town. Other folks, other firms tried to break into that, I think Best Buy and others, but it never really worked. They never really got to intrude really on GameStop's market share. So GameStop became the place where people went to trade in physical games. Of course, fast forward a few years, and now physical games, not really a thing anymore. Most of the new consoles, everything else are all digital. And so people have been kind of riding the death knell for GameStop for quite some time. And so we were talking about it on our show last year again. I think it was September. We did a poll, kind of a death poll, GameStop or BlackBerry. We said, gun to your head, which would you rather buy? And we joked, we kind of picked Bed Bath & Beyond. You guys actually out there picked GameStop by about an overwhelming majority, about 80-odd%. So you folks were into the GameStop. Turns out that was the right call in retrospect. But for most of the last year, this thing had been circling the bull. A year ago, this thing was trading $4. And it kind of hovered around $4 for most of last year until about August or so. That's when things started breaking their way. We saw news later on that year of a partnership with Microsoft. That seemed to help things a little bit in terms of selling their digital Xbox stuff. We also saw the infamous Big Short guy, Michael Burry. It came out that he had a stake in it, around 3% or so in his fund was allocated to GameStop. So he started talking it up a little bit. So that started turning the worm a little bit. Of course, he has since now, of course, disavowed all the madness that has happened since then, calling it, quote, insane and dangerous. And then it continued to the end of last year. The stock was looking good. It rallied from about $5 all the way to nearly 1884. So over a 3x return. You couldn't be mad at that if you were long GameStop. This thing had been circling the bull. Many people thought it still was. And yet it was trading up to about $20. So there you go. They also, on January 11th of this year, this is where the worm really started to turn. That's when GameStop appointed the former CEO of Chewy, the online, dog food, pet food retailer. His name is Ryan Cohen. They appointed him to their board. And that really appeared to be the catalyst for just about everything that took off. 'Cause at the same time, while this was going on, after the Big Shorts and the Microsoft partnership and all this other stuff, when they appointed this Chewy CEO, the message board over there on Reddit, you guys probably know Reddit. It's an online message board. Even if you haven't been there, you've probably heard of it. There's a big forum there called Wall Street Bets. Around 2.2 million or so members at the time of this stuff happening. It's ballooned to like 3 million now. They were also posting about GameStop, saying, hey, this thing, maybe we could turn it around. It's cheap enough. We could buy it up. And they also knew that this was a heavily shorted stock. We'll get to all of that in a second about what that actually means. But at the time, the stock was around $19. And so they're talking it up, 2.2 million members. Most of them are just talking, blowing smoke. Most of them aren't going to do it. But even if a small percent, let's say around 10%, which would be a big number. It probably is less than that. But let's say 10% of them actually did it. You could buy a round lot of the stock. It was very cheap, $19. So, of course, you can buy a round lot for $1,900. Not bad. And so now you got 100 shares of GameStop. If everyone did that, you're talking, 20, not everyone, even 10%. You're talking about 20-odd million, 22 million shares changing hands over the course of not that long of a period, which is a substantial amount when the outstanding float, how many shares are actually out there, listeners, is about 50 million. Just this message board alone, this little silly message board, not that little anymore, and not that silly. Well, maybe it is. We'll get to that in a second. That kind of added fuel to the fire about what was going on. And then, of course, the analysis started coming out that, hey, GameStop is heavily shorted. Actually, at the time, it was the most shorted stock on the planet, 140%. So more than 100%, more than that 50 million outstanding shares of stock that was actually existed. More than that was sold short against it. And that kind of sets up this perfect storm, this perfect scenario of all this. Before I get into short selling and explain all that a little bit, Dan, for our listeners who want to know about that, hopefully you've gathered your thoughts. Give me your initial thoughts on this mad frenzy that is GameStop, sir.
We've seen this movie before, right, Mark? I mean, back in the internet.
Maybe not quite as dramatic as this in intraday, but yeah, we have seen echoes of this before, yes.
Yeah, and yeah, that's a really good point too. Like the internet bubble, you would see this stuff and like, holy cow, over a 6-month period, people would double their money. Now it's over a 1-day period. People double their money every freaking day in this, And so it's interesting. And I'll tell you what, like it does bring me back a little bit back to the .com days when you would always see like the last day would be like the last hurrah where like something really pushes up just an insane amount. And you're like, oh my God, how could it go up that much in one day? And then that's like the death nail. Like after that, boom. So, yeah, I don't know where it's going to end up. But, I was talking to my son, this is a great spectator sport.
Yeah, spectators are lining up. This Wall Street Bets board has suddenly overnight become the hottest thing on the street. Throw out your fundamentals, throw out your analysis, throw out everything. It's whatever this board is tweeting about, chirping about, is the next. I'm getting alerts from established outlets and research firms saying, hey, this is what they're talking about next. They're talking about Tootsie Roll Corporation, all these other absurd names. That's now taking the place of doing your due diligence, just going to see whatever they're talking about on Wall Street Bets. We'll get to that in a second. Let's explain more of the mechanics of this for those of you out there who are new, and most of you are, and are still kind of confused by this. What the heck are we talking about short selling? How could this work? How can you sell a stock you don't own? Well, okay. Let's go out to XYZ, everyone's favorite name. Let's say it's trading, I don't know, $100. Nice round number. You don't think it's going to go up. You think it's going to go down. Let's say in our case, you think it's going to drop to 80. So a nice 20% hit right off the top. What can you do to take advantage of it? We've talked about a lot of option strategies to do that, and listen to our archives if you want to do that. But of course, you could always go the hardcore, straight to the money route and just straight to the fire route and just sell the stock short. Of course, you don't own the stock. So what does that involve? You're going to go out to, usually if you're a case of a retail customer, you're going to go out to your broker and say, hey, I want to borrow, let's say in this case, 100 shares of this stock. I don't own it. The broker is going to lend it to you. They're going to charge you, depending on how difficult those shares are to get, they're going to charge you. So it's not a free altruistic thing. There's loan interest. There's fees involved in this. But your goal is you're going to suck up that fee, and you're hoping the stock's going to drop the $20 to 80, and you're going to make your $20. You're going to get the heck out of Dodge. You're going to close the position. You're going to sell it at 100 shares you don't own, buy them back at 80, buy it back, make that $20, pay back the broker the fee they charged you, and you're off to the races. And of course, magnify this much larger size, and of course, much more difficult to find the shares for some of these massive hedge funds that were betting against Melvin Capital. Now you see what's going on. That's also how names like GameStop, it may sound counterintuitive how you could have more shares shorted than are actually floating in a particular stock, but that can be the case if they're out there just borrowing aggressively. This is where the term hard to borrow comes about, because these shares are literally hard to find now. Name like GameStop, it was getting hard to find because there's so many have been heavily shorted. So you're going to pay a large amount of short interest. Currently out there in GameStop, it's looking like 25, 50% of the price of the shares you're borrowing is the going rate right now, which again, it's insanity out there. So you can charge those rates and get it. And also people track this. This is the number called short interest. You can go find this for yourselves, looking for the names that have the most short interest. What does that mean? It's effectively the percentage of shares that are shorted out there versus the outstanding number of shares in particular. That's how you get that number like 140%. GameStop was unique in that sense. It was the most shorted stock. There was no other stock out there that was really well over 100% like GameStop. We'll get to some of the others that potentially could be targeted in a little bit. That's why GameStop was uniquely positioned, kind of the perfect storm for this. Now, Dan, let's inject a little options terminology into this. Let's talk about, because obviously we always like the options way instead, because you don't have to short the stock, right? You could buy a put, and that'll do this for you as well. So maybe why don't you really quickly, Dan, for our listeners, compare and contrast, let's say buying a put versus selling a stock, and why you might prefer the former versus the latter, sir.
Yeah. And that becomes an interesting conversation when it comes to GameStop, because typically I would say I would much rather I would much rather buy a put than short a stock because you have limited risk. But I'm looking at the puts, like the 2-day puts, at the money puts are like $100.
Yes, they're insane right now. They are literally insane. If you want to get to those prices now, I pulled up a few myself as well. I did this a little bit ago when GameStop was trading $365. Dan, I don't have it where it is right now, but I'm sure it's 100 handles away from that in some direction. I'm going to straight par put, 100 put, so $265 out of the money for those of you who can't do the basic math. I looked at, first off, the Jan put going out in 2 days, so expiring on January 29th. That was trading for $4.50, Dan. $260 out of the money, $65 out of the money with 2 days to go. And the Feb going out to February 12th, going out to the weeklies, going out a couple of weeks. That par put, $28.10, Dan. So if you bought that, you're effectively already pricing yourself in down to about $72 in terms of how much you paid. If you're wondering also, Dan, that's a 296% volatility. So you're right. Buying puts a little bit challenging out there, Dan.
And the skew has been interesting. I've been watching the skew, and I'm looking at it live now, and it's actually, this might be kind of telling. I didn't really think about this. GameStop had the calls at a much higher skew, which they still are in the 2-day, but you can't really believe that. But it's pretty gosh darn flat in the 9-day options, in the 16-day options, the 23-day options. Like you expand out 14 strikes and it's flat. So what that means is the skews kind of come in. That kind of means that, to me, well, what that means, I think, is that a lot of the people who were long calls might have taken some profits. That's interesting.
That's going to combine and even out, of course, the skew out there as well. Getting ahead of ourselves. Let's get into a little bit of options juice in a second. But, of course, let's talk about what they asked us about at the top of the show is what is this short squeeze thing? So that's why I say GameStop was kind of uniquely positioned in this sense because, like I said, it was 140% shorted, more than the outstanding short. So the folks at Wall Street Bets knew this, and they knew if they started driving this thing up a little bit, and that shows how savvy the retail folks have become. They know that could cause some pain with these shorts out there, and that kicks off a frenzy, which is known as a short squeeze. Like I mentioned, your people who are shorting the stock are out there borrowing shares that they don't own to bet on a drop. When the stock starts moving against them, the folks who are lending them these shares, the brokers, other outstanding firms who own the shares are going to start saying, hey, you know what? I kind of want those shares back. And they're going to demand them. And so what happens is these people who were short have to start scrambling to cover those short positions. So they have to start scrambling to buy back a stock that they probably think is still going to drop, but they have to buy it back now at these crazy levels. And that's what started kicking in GameStop is these shorts that were heavily short. And I mean, Dan, we're in a world now where kind of obscure hedge funds like Melvin Capital are trending on Twitter because folks are cheering that they're going to go under because of this. That's the world we're living in, Dan? Isn't that crazy?
Yeah, I mean, it's extremely crazy. I mean, more instability in our economy. Yes, cheer that on. You know, that's like, no, that's a terrible thing. And, you know, like, do you mind if I talk a little bit about Wall Street Bets just a little bit?
Go for it.
You know, like I've been finding it interesting, you know, and I've been trying to look at it and trying to be less cynical in my old age, too, and just really take things in without really forming an opinion and just trying to understand it. And so I'm like, what's going on here? Like, why is there this short squeeze? Why is this thing? And like, I see three possibilities. And in the order of likelihood, like the first one is the least likely scenario. The last one is the most likely scenario. Either like there's some really savvy folks in the room in Wall Street Bets who think that GameStop is undervalued. That's extremely unlikely. Like that's just not true. But I think that some of the folks in there don't really understand short selling and its economic purpose, and maybe oppose it and feel like they're sticking it to the man somehow, which is not really true. You know, like markets exist for the price discovery process, and you know, if somebody buys a stock, it's because they believe that its value is higher than its price, and they buy it, which forces the price higher. When people short sell, it's because they study the numbers and they say, no, this company's not worth it, so I'm going to short it, and that pushes the price down. And the stock price doesn't bankrupt a company. What bankrupts a company is they're not selling enough product to cover their expenses, you know? So like, it's not like these short sellers are inherently bad people. If anything, they're helping with the price discovery process. If anything, they're doing something good. But I think a lot of people, I think there may be some people in there that morally oppose short selling just out of not really getting it. The third possibility, which I think is probably the most likely, is it's a little bit of a pump and dump scam where, you know, there's no moral thing there. There's no anything. They're just trying to intentionally create a short squeeze, manipulating the market and driving the price up.
Everything old is new again, including the old pump and dump out there. But let's get into that a little bit, because you're right. It is insanity what's going on. And you're right. There are people out there who just take a moral opposition to short sellers. And I get it. A lot of these short sellers don't exactly convey themselves in the best light. They get out there. They're pretty grandiose. They're pretty obnoxious sometimes. And sometimes the dishonest ones will get out there and spread false rumors, obviously, to crush these stocks and make their money. So it seems like they're evil. It seems like they have this evil intent. Some of them, again, do a lot to embody that look. but they do convey and do perform a vital function in the marketplace. Look at any marketplace where short selling was banned. The market's got annihilated because it is an essential function of what should go on. The brief period that we banned short sellers in the stock market here in the U.S., it happened very briefly. Back in go look it up, the crazy great financial crisis madness of about a decade ago. And they briefly banned it, and then wiser, saner heads came to fruition out there. But it does have this negative connotation out there. So let's get into this. Let's get into what the heck was happening out here. GameStop, like I said, was the most shorted stock on the planet. By the way, if you're looking for some others, you're curious, GameStop was the number one out there with 144% of their float. Number two was Dillard's with about 91% of their outstanding float is in the short side. Then we got Ligand Pharmaceuticals, 64%. Bed Bath & Beyond, the other one in our poll there, also at about 64%. Then Fizz, F-I-Z-Z, 62.5%. AMC Networks, we'll get to them in a little bit as well. 59%. Macerich out there, ticker symbol MAC, that's 58.6%. Academy Sports and Outdoors, 55%. SunPower, 53%. And then Target Factory Outlet Center, Tanger Factory Outlet Centers, ticker symbol SKT, 49.5%. And then Accelerate Diagnostics, AXDX is the ticker there, 48.3%. So those are some of the other ones that folks are now starting to target and looking at these. And we've already seen big moves in some of them. In fact, they crunched the numbers just coming into earlier this week. The 20 small cap Russell names with the largest short interest out there right now have already gobbled up they rallied about 60% so far on the year. So outperforming everything else. Take GameStop out of that, it might drop a little bit, but still madness. And this is on the verge of wiping out firms. Like I mentioned, people are out there celebrating the demise of this Melvin Capital, which is a firm that likes to short names out there. And they've lost many billions. In fact, they had to get a big infusion of about $3 billion or so from Citadel and they believe Peak Six and a few others. So, if Citadel's out there cutting you a check, that's probably not a good sign for your firm. They finally closed out their shorts today. It sounds like for big losses. Let's talk about the options element of this right now. Dan and I kind of just touched on it, how absurdly expensive. Let's put the big caveat out there. If you're listening to a show like this, if you're a beginner options trader, tread very lightly and probably not at all out there in GameStop options because it is literally insanity out there. Dan and I have been doing this professionally for a long time. We saw madness in the dot-com days. We saw some madness in the great financial crisis. Nothing that I can recall like this, where the intensity, intraday intensity of it is so insane. This is beyond anything I've experienced before, and I've been doing it for a while. So tread with caution where the pros fare to tread. Listen, like I mentioned, the Feb par put, Jan par put, both of these trading at 300% volatility. So now you might say, I want to go sell that to high heaven. Maybe in a rational world you might, but good luck getting a broker letting you sell that and not tying up a ton of capital along the way. And also get ready to probably buy GameStop at about 100 with stock that was trading, $19 not too long ago. So you got, nice $80 or so of downside potentially in there. So something to bear in mind. Well, let's break down some of the options component of this as well. Because I mentioned it started really, the catalyst really seemed to be when they appointed that Chewy CEO to their board back on January 11th. We didn't see a ton of options action as a result of that yet. In fact, coming into the year, GameStop was still kind of a sleepy name. The ADV was around 155,000 contracts. So decent paper for a cheap name, but nothing blowing the doors off. And the OI to start the year from an options perspective was 771,000 contracts. Of that, I'm looking at the chart right now, looking at the top 20 positions, and only 2 of them were positions that didn't expire on January 15th. So pretty much all of this size OI went away on January 15th. Another interesting timing, perhaps, with all this madness, a little bit of the insanity going on out there because expiration started happening right in the middle of that, which, of course, exacerbates the gamma impact of all this fun. So we saw January 11th when they hired that guy. January 13th is when it started to go off the rails out here in GameStop land because it was still hovering around $20 basically until January 13th. That's when the stock gapped up to about 31 and a half. And the options activity on GameStop exploded. It was doing about 150,000 contracts a day. On that day, it did 930 100,000 contracts. Now, to put that in perspective, we do a lot of analysis on shows like the Option Block and others. Tesla on a good day will do 700, 800, 900,000 contracts. Apple will do well over 1 million. So you're talking Apple and Tesla type numbers now. For GameStop, a pretty sleepy name out there. Of that action, 2/3 of it, so over 600,000, was in the call side. So now you're talking a couple of days going into from expiration. You're talking a lot of these calls are probably pretty near dated out there because they want them to be cheap. A lot of them are coming from these folks on that Wall Street Bets forum. Don't have huge accounts, so they're not going to swing for big meaty calls. They're going to swing for out of the money, probably weeklies out there. So that's going to start impacting things as well. We'll get to that in a second. On the 14th, so the next day, the stock closed almost $40, so gapped up about another almost $9. We saw another 750,000 contracts trading that day. Again, more than half of that, 450,000, coming on the call side of the ledger. Also saw 93 million shares changing hands. A normal day might have been less than 16 or 10 or so. Instead, 93 million shares changing hands. So all this is going on now. We're getting close to expiration. We've got folks gobbling up near-term calls out here in GameStop. So what happens? Dan and I used to be market makers. When people are coming in, and we had this experience in some names out there, and certainly when something happens in the name and it starts trending in one direction, all the paper flow is in one way, listeners. So in this case, all the calls, all the orders coming in to the market makers out there in GameStop, guess what they wanted to do? They wanted to buy calls for the most part. There obviously were some puts trading too. Not all calls. Preponderance of it was calls. So if you're out there selling tons of near-dated calls, going right into expiration, what market makers have to do, because they don't want to be short all that, they have to turn around now and do what's called delta neutral hedging. They want to hedge away the delta component of those out. They don't want directional risk. That's for the birds. They don't need that. So they're going to turn around and buy stock against that. And the more calls they're selling, the more stock they have to buy. And of course, heading into expiration on the 15th, this kind of exacerbates that because the gamma explodes to high heaven. Dan, what are your thoughts on that before I keep going a little bit on some of the other crazy things that happen? We have this initial influx of madness of GameStop started kicking off really on the 13th. So a few days from expiration, we saw massive options paper, 1 million plus, close to 1 million contracts one day, 700 some odd thousand the next day. Most of that calls going up. What are your thoughts from your old market making days on how this one-sided paper goes up and how this gamma phenomenon could help drive the stock further, sir?
Yeah, I mean, to me, the bigger thing, Mark, is the gamma phenomenon. Because a lot of people don't realize this. Like, there are certain times where the tail can wag the dog just a little bit in a strange way, and it can either pin a stock to a strike on earnings if market makers are long gamma, or it can cause greater volatility if market makers are short gamma. And I kind of had to think about this one a little bit. Like, if you look at the implied volatilities across the board, like, it's obvious that every single retail person is buying these options. That's the only way the implied volatility can get so high. And so that means market makers are just plain old short. So they have negative gamma. And, that's why I say the gamma is maybe more important than whether they're buying calls or buying puts, because either way, they're delta hedging and they're just thinking about it like a synthetic straddle. So what happens is, like, today, like, the at the monies last night were like, Jesus, what were they? 140 or something strike, right? Like, those are hedged with like a 50 delta. The market makers wake up this morning and now they're 100 delta, which means their calls are short 100 delta per option, and there's thousands of them. But they're only long 50 shares against there, but they've got to now be long 100 shares. And so guess what the market makers have to do? They woke up this morning and they're like, oh, crap, I've got to buy a bunch of stock here at the high. And that just forced the stock even higher. So it's very similar to the short squeeze. And I've heard some people refer to it as a gamma squeeze. And, fair enough. Like, it's a pretty good name for it, I guess. But yeah, like, I think a lot of people don't think about that, how this negative gamma is also putting pressure on these options.
And that's been fascinating to watch. And just how prevalent the understanding of this is getting out there also shows just how much the markets have evolved. People were talking about this impact on the Wall Street Bets forum. I've seen articles out there from other, very, very broad financial publications, even talking about the impacts of negative gamma and how market makers have to hedge it. So the market has evolved. The retail core out there have become much more savvy, whether listening to a show like this or educating yourself or educating yourself through your brokers. You've started to learn about these things. So ballyhoo for you and the folks at Wall Street Bets. They knew about this and they were hoping to leverage this to help drive it up further. So what do we have now? We have this perfect storm of events. You have a stock where more than the entire float is shorted. So you have short sellers scrambling to buy this back, which is driving it up. You have retail folks. The stock was pretty cheap to start with, so they could also afford to buy it up. So they're buying, even a small percentage of them would be enough to buy a large percentage of the outstanding float. So that's driving the stock up. Then you have folks buying near dated calls, and the massive influx of that compounded with things like expiration and gamma getting crazy and everything else also is going to kind of add fuel to this conflagration of upside that was GameStop. So the point where now we have this thing really starting to move, it's really starting to churn on the 21st. So coming in the next week. And we started noticing it before. This is really when it came on our radar. A noted short seller firm out there, Citron Research, they were going to do a live stream out there. And this is, I think, part of the reason why people hate the short sellers. These guys were poking the bear a little bit here. They came out and said they're going to do a live stream of the 5 reasons GameStop buyers at these levels are the suckers at the poker game. They say stock's going to be back to $20 fast. We understand short interest better than you, and we'll explain. So that got a lot of people angry. And, this Wall Street Bets, they call themselves 4chan with the Bloomberg terminal. If you know anything about 4chan, it's not exactly the best hub of the internet. So they're coming at it from a certain, shall we say, malignant perspective on this. So when they saw that, they got all up in an uproar. Again, they started effectively trying to shut down this guy's account. They were hacking his Twitter and everything else. So the Citron comes out and cancels their live stream. And this back and forth with this short seller really seemed to get everybody into yet another frenzy because the stock took off. Again, by the way, I should note, Citron has been short and been short. They finally gave up the ghost at $90, 90, which sounds absurd, but also if you see it got up close to 400 today. Not that bad in retrospect, but still they took a huge, huge beating. The next day, the 22nd, stock closed at $65 now. So we've gone from about 19 to 65. Another day of just absurd volume. 2.1 million contracts hitting the tape. This is blowing the doors off just about everything else out there. The interesting thing, Dan, this gets back to your point from earlier. It wasn't all calls this time. It was almost exactly, I think puts might have actually, by a few thousand contracts, actually outpaced calls that day. So it wasn't all calls anymore. Also 196 million shares trading, but there was enough going on. We had already broken through these strikes that the market makers were obviously clearly still short. The retail public obviously still in a buying mood. And also the short sellers still scrambling to cover. All of that continuing to propel it north and prop it up. In the interim, we had everyone's favorite anti-short seller guy, Elon Musk, come out, stick the knife in a little bit. He hates short sellers. So he tweeted about that, gave the stock another burst of momentum. Another noted venture capitalist comes. Everyone's got to tweet about their positions. You know this, Dan? They can't just buy them. They got to go out and tweet about them. So this venture capitalist tweeted he bought a 50 lot of calls in GameStop. That sent it off to the races. So a lot of insanity is afoot out there, Dan. But, interesting stuff. This is not just pure madness. What does this open? What opportunities does this open? Dan, we touched on this a little bit before when we talked about the Tesla crazy call skew. But when you see a name where particularly far out of the money calls are bid up to high heaven, what kind of opportunities does it open up for people, sir?
Yeah, I've been looking at that lately, and you can find them out there too. So, what that means is that people have bought a lot of calls, and it's because they're buying them because they don't really get options and they don't get volatility, and they're just buying calls because they're thinking the stock's going to go up. And so what that ends up doing is it makes them what I call mispriced, too expensive, And so you can gain a statistical edge in some cases by doing things like call credit spreads, by selling upside options that are overpriced. And I got to be a little bit careful because, some of these, like GameStop here, for example, when they're called, and now actually the 2-day options, now I'm seeing a skew in them. I wouldn't be selling call spreads in GameStop because it can just blow through those strikes. So it's a little bit more of a risky game, but it's a game that arguably can have edge in the right scenario.
Yeah, and it's hard to argue maybe GameStop is that scenario anymore, but we were talking about this even on our option block program earlier this week. Some of these other names I talked about here, the other heavily shorted names that may potentially be savvy, or not savvy. That's hard to call anything of this goes on with this savvy, but maybe potentially targets for these other, potential short squeeze traders to come in. And one of the ones we talked about at the time on the show was AMC Networks. Now, what happens when these things get bid up to high heaven, listeners? In GameStop, it's kind of so outlandish. The at the monies are extremely expensive, but the out the monies it's not quite as available anymore in GameStop. Some of these other names are still, shall we say, pre-squeeze or in the early stages of it. Open up some opportunities. We discussed, for example, at the time, AMC. They had just announced that, hey, we're not going to go the way of the dodo. We raised a bunch of financing. We're still going to be here for a little while. Stock was trading around $4.50 or so, and people started already targeting it then and say, hey, this might be a next potential short squeeze because it is, I mentioned, it's on our list. It's heavily shorted. 59% of their float is short. So we talked about then the out of the money, I think at the time was the 4-7 vertical. The 4 calls, which are about 50 cents in the money, and the 7 calls. The 7 calls have been bid up so much, you could buy that 4-7 vertical for about actually a little bit less than the $4 call, the intrinsic value of it. You can buy it for about 40 cents, that vertical, for a $4 call that already has 50 cents of intrinsic value in it. That's how bid up the 7 call. I like that spread so much. We talked about it. I put it on for myself, and so far AMC's looking pretty good as a result. So those are the opportunities that are created when you see something so far out of the money is bid up so much, you can get a vertical at levels you probably couldn't get otherwise. So that's something to pay attention to in these names, and that's the more savvy play rather than just loading up. I know it might look good. Hey, these calls are making hundreds of handles. It's great, but these calls cost 300% volatility. Buying these in any sort of endeavor is not a long-term path to profitability. You want to have some sort of leg in your trade. You want to do a spread first off, and you want to have a leg in your trade that has a selling component to take advantage of the absurd levels of vol, because you can't stay. Nothing can stay 300 vol forever. It's impossible. If it was, the GameStop would be untradeable. It would be halted and it would be gone. 300 vol is insanity. So it's talking double Bitcoin vol right now. You know how volatile Bitcoin is these days. So that vol is going to come in. You want to have something in place to help you profit from when it does. And so a short leg in your spread somewhere, like a nice vertical where you're selling an extremely overpriced out of the money call against a probably overpriced, but maybe less so at the money call, that can help out. Now, just bear in mind, I was looking at this AMC spread this morning. It's looking pretty good, but it's a spread. So it's not going to go immediately. In that case, it was like a $3 spread. I think AMC was trading $15 this morning. So you might say, oh, that spread should be immediately trading $3 because it's far in the money. And the answer is not quite yet, because the calls got bid up, the 4 calls get bid up. Also, the out of the money calls, they get bid up by a percentage even more. So that spread was still trading, was more than I paid for it, but wasn't $3. So you don't go to max spread length right away. So bear that in mind. You got to be a little bit diligent with how you take these off. Got to take a little time for that other leg to come in. My spread went out for a couple of weeks out there, so I gave myself a little bit of time. That's another reason why the spread hasn't exactly widened out too much yet, but it will. You can also take it off a little bit. If the stock keeps rallying, that spread will go to its max value. So don't worry about that. But don't be surprised you put on this spread and the farther out of the money leg continues to explode at an astronomical level. And so your spread doesn't go to its max value right away. It's not going to happen. So just bear that in mind. You're going to take off the spread for some portion of its max value, probably, if you're doing it right. So bear that in mind out there. Dan, any thoughts on that? You're putting on these verticals on these crazy names and crazy times, and then the stock gaps in your favor, and people are surprised. I'm sure you get this all the time. Why isn't my spread trading its max worth right now, sir?
Yeah, that's the one thing about vertical spreads that I think when you're furthering yourself through trading education, you can make a real quantum leap and have a really deep understanding of vertical spreads when you really get how the time component of them works. You know, I think I've made the analogy on this show before. It's kind of like catching a baseball. Like, not only do you have to like be in the right place, but you know, you got to close the mitt at the right time too. You know, if it's landing there. So, you know, like you're setting a price target. Like if it's a bull call spread, you're setting a price target at the short strike because that's when you start giving up profits above there. But it's also a time target. If you get there too early, you just got to wait and collect that money through theta and risk it retracing and losing the profits you gained.
You know what? Breaking news, Dan. Looks like Miss Yellen now says, our incoming Treasury Secretary says she's monitoring GameStop, sir. So the hand of the man / the woman in this case may be cracking down, sir. What do you think?
Well, I mean, I think it's sort of inevitable. I mean, how can it not happen? It's drawn so much attention. How can it not happen?
Yeah, we have more thoughts on this, but you guys obviously have thoughts on this too. So we're going to get to some of your mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody. Welcome to the mail call. You guys are all a Twitter, pun intended, about game. In fact, Dan, this thing has gotten so crazy out there. I've seen folks pontificating, including this one. This was put out by a Bloomberg columnist. I've seen other people writing about this. They think that far out of the money calls should now be structurally more expensive going forward as a result of this. I think this should fundamentally change the way we price options because we're clearly not taking into account the madness that is Wall Street bets and short squeezes and everything else. So we thought we'd put that out to our listeners, Dan. We said, hey, the GameStop frenzy is shaking the options world to its core. Some people are actually suggesting that out-of-the-money calls should be priced much higher going forward to account for these potential eruptions. Do you agree? Gave you three choices. Yes, this changes everything. No, this is a joke. Or what is happening? Dan, what are your thoughts on this? A, and then B, what do you think our audience is voting for?
Oh man, you know, let's see, which one should I even answer first? I would say that I think I'm going to go with A across the board.
You think our audience says, yes, this changes everything?
Yep.
I mean, think about that in a world for a second where all out of the money calls are now raised. I mean, I guess that wouldn't be the worst world to live in if you're not a market maker. You don't have to actually buy these things because you're going to be buying a lot of them if you're a market maker because every covered call seller and everyone else out there who's selling upside, they're going to thank you, Dan.
Well, I mean, let me clarify. I mean, as far as does this change everything? Well, I believe that it's likely that there's going to be this crackdown that we're talking about, right? And so so the GME frenzy, let me make sure I'm reading this right. The GME frenzy is shaking the options world to its core. Some people are actually suggesting that out of the money calls should be priced much higher going forward to account for these potential eruptions. Okay. You know what? So here's the thing. Whether I don't care. My answer is I don't care. I don't care if options are priced higher or not, because if they end up being priced higher, it just gives us an opportunity, you know? I imagine most people would pick B. No, this is a joke now that I look at it closer.
I was surprised you're going for A, but hey, you never know. Maybe you're throwing a little bit of a B in my bonnet there. But yeah, that would be nice if all these upside calls were suddenly very juicy, because I know a lot of you like to sell covered calls out there, and that would certainly put a little bit of extra income in your accounts. But yeah, our audience is going 80.5% so far. No, this is a joke. 9.1% saying, yes, this changes everything. And 10.4% saying, what the heck is happening? A bunch of you have already voted. Get on over there, add options if you haven't already. This goes for a little bit, so you'll have a chance, if you're listening on the podcast, to vote as well. Folks are going crazy on this here, Dan. We got so many comments on this. A regular listener, Tony Weber, he's usually in our, might be in our chat right now. Let's see. He sent this in. He says, check this out on IB. No longer accepting opening orders for GameStop right now. This is why I say about be careful diving into those GameStop waters, because even pros right now, and obviously Petterfy is saying, yeah, I don't even want to play in this game out here. So yeah, that doesn't surprise me at all. That Petterfy, he's been known to put his foot down when he doesn't like something, and he clearly doesn't like this. And yeah, so yeah, no opening positions here. Looks like he was trying to do a put spread. And he got a warning, says transactions are limited to closing trades only. You're probably going to be seeing a lot more of that, listeners, if this continues, which is another ramification of 300. It's already been halted multiple times. 300% volatility is not sustainable, and it's not really good for anyone out here. We also talked earlier about Melvin Capital, the hedge fund that got targeted. They closed out their GameStop on Tuesday, took a big hit. And our buddy, Mr. Bill Ulivari, he chimes in. He's no lover of the short sellers, even though he acknowledges they have a function. He says, I don't feel sorry for them. That's like feeling sorry for a casino when someone wins a hand. Firms pay exchanges to see and trade order flow. Sorry for their losses. Sorry for their losses. But TFB, I'll let you look up what that acronym stands for on your own. We're family friendly here, so we can't relate that one. Mr. Bill. Everyone's fired up about Yellen looking at this now. Walter Bishop chiming in. He says, does that mean she's buying calls? Yes, Janet Yellen, the Treasury Secretary, is buying calls on GameStop. I like that there, Walter. Silvano chiming in about the other one, about the Melvin Capital going bust. He chimed in to say, they'll short it again. They're just waiting for the right timing. Well, maybe. I don't know. You've heard various rumors about them being forced into liquidation. You take multiple multi-billion with a B hits. You have to get bailed out by Citadel. Citadel's not giving you favorable terms on that, in case you're wondering. Citadel known to go for the throat. So, yeah, they might still exist in some capacity, and they're saying they're going to keep going as an ongoing concern, but much muted going forward, I would have to think. Oh, speaking of Petterfy, I don't know why, but Dan, I guess you'll like this. This comes from our regular listener, J3 Dingle. I'm not sure if this is GameStop related or what, but he sent in just what he called the greatest picture ever. I can't put this out there, listener. You might have to look for it on the IB site, but it's just actually a picture of Thomas Petterfy grimacing and looks like pain and almost ripping his hair out. And so apparently Thomas not liking all what's going on in GameStop here. It's actually on their website. Looks like it's their margin frustration image. So he liked that. I'm with you, J3. It's a pretty good picture. Dan, are you surprised now, or perhaps not surprised, that brokers like IB are starting to shut down the GameStop frenzy, sir?
Yeah. Well, I mean, actually, the reason I got distracted before is because I was trying to leg a spread in a different one of these crazy names, and it wouldn't accept the spread order. It said that they're not accepting spread orders. It was AMC. And so I'll leg into it, and because you could buy, like on the screen, you could buy a dollar vertical spread at 0. And so I buy the bid, and then Thinkorswim tells me that they're not accepting sell orders. So I'm like, well, what? Why didn't you tell me that earlier? Like, I'm trying to leg this spread. And
so you just got some meaty calls on your hand now?
Yeah. It's like, what am I supposed to do with this? So that's why, I came, I was a little scatterbrained.
Hopefully you could sell the close. Can you sell the close at least?
No, everything's like 80% wide. The offers are 80% higher than the bid. So I kind of just got...
Hopefully you like what you bought, because you might be wearing it for a little bit. You might be looking like Thomas Petterfy here on the show, yeah, pulling out the hair there. But yeah, this sign that these brokers are starting to shut these things down, maybe that might be the tipping point here for some of this madness out here. Well, it sounds like Dan's about to get run over, so we should probably let him go manage his trade. This is what we're talking about, listeners. These are crazy times. Brokers are implementing rules on the fly without maybe a lot of warning or a lot of input from their client base out here. So definitely trader, not just buyer, but trader beware out there if you're going to trade. Certainly GameStop and any of these other names as well. All right, Mr. Dan, that music means we've come to the end. We can go for another probably couple hours. You guys have tons of questions. I think we will certainly revisit this topic in the near future. If you guys got more questions, we certainly hit on a lot of it, as much as we could squeeze in to about an hour. We got a double-length episode today as well, so hopefully you're thankful for that. If you have more questions about game, I'm sure you do, or any of these others, AMC, what to do with these verticals, what to do if your broker's not taking, opening/closing trades, that sort of stuff, hit us up. We'll be sure to talk about it in the next boot camp, or maybe if you want to get to it sooner on some of the other shows we have here as well. Let's leave it on a positive note here, Dan, before we go off. I say you guys can always rate and review us over there. You can be just like our friend here, Zeely KW. Zeely KW wrote in to say, total noob here. Huge fan, guys. Appreciate all your content. Very new to this, and with your help, I'm starting to grasp things better. Still have 1,000,001 questions, but I enjoy listening to the content, and I'll listen as much as I can before wasting your time with questions. But I had to let you guys know I appreciate it, and you guys are amazing. Left a 5-star review on the Play Store. Thanks, guys. Well, thank you, Zeely KW, and everyone else out there who's taken the time to rate and review us on the platform. It does help new folks like Zeely KW find their ways to this show, and it's more important than ever, you could argue, with insane things happening literally every day, to have a show like Options Bootcamp, everything else we do out there on the network. And before we go, Dan, I gotta imagine folks are going to want a little bit of a helping hand in these markets. So if they do, where should they go? What should they do, sir?
Well, I am glad to help. That's what I do. So make your way over to markettaker.com and just contact us. Let us know how I can help, and I'll be glad to do it. We've got a lot of free content there as well. You can open a free account, a free, educational account. Lots of great stuff in there, and we'd love to talk to you.
There you go, Market Taker, 2Ts.com. And while you're at it, maybe you want to buy a piece, something maybe a little bit more sane. The folks at Demand Derivatives have been big supporters of our network of late. Check them out, demandderivatives.com. They still have their crowdfunding going on. It's going on for a little bit longer. So if you want to get a piece of this forthcoming new futures and someday options exchange out there, they made the minimums very small, $105. That's less than one put on GameStop right now. So get out there. You can buy a one lot just to participate, have a piece of the future. Demandderivatives.com. Click on the crowdfunding link. They also have a survey there if you're interested in just what your thoughts are on what's going on in the market right now. They'd love to hear from you. Click on the survey link there as well. Demandderivatives.com is the place to go. And on behalf of Dan and everybody over there at Demand Derivatives, and indeed myself, I thank all of you out there for downloading, streaming, subscribing. Don't worry, we're here for you all this week. We'll be back. Brian's coming up a little bit later today, OPR. I got a feeling he's probably going to talk GameStop. So stay tuned for that. We're back again tomorrow, episode 2 of the Option Block. And, of course, Twifo talking futures options Friday, vol views. And then we're back again next week with another Education Wednesday and another episode of Options Bootcamp.
This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.